Hello everybody, Average Gamer here. Welcome to another investment video or investment vlog for Monday. Was it the first? The first. So, a couple things, as you'll notice from the thumbnail and from obviously the name of this. Things didn't go too well in January, so stocks overall kind of took a dip. But as I've said, not too concerned about the overall market value of most stocks. The only time we're really concerned about them is when they're going down. It's how much of them can we buy, because we will want more. And of course, if cases like today happen. So today I was going through the numbers from last month. Noticed something very strange. Got a dividend from everybody, but one of them had an article. And as you can obviously tell from the thumbnail, first L for the year. So, one of the companies decided to no longer pay out a dividend, which they can. They're allowed to. No big deal. And it's one of the things that happens. Yeah, so made $195.55 Canadian off the dividend, which is okay. I was buying it because it was going down. Now, here's the catch-22. Got $1,800 in this stock, 4,600 stocks. Right now, if we were to sell, we technically would lose $100 in value. But, I say here the but, our average stock price after paying dividends and all that stuff is 39 cents. So, theoretically, I'm going to try to put this up on the market, and I hope that the market either stays the same or goes up, or basically just stays the same. And I can get this stock for maybe try to sell it for what the market is, which is 42 cents, which means I'll be able to actually bank the difference. To put that in perspective, that's what, 3 cents a stock? So if we do the math real quick, that's 3 times 46.11. We'd be walking away with $138.33 in our pocket, extra above our overall average. So we've made 119. We have an average stock price of 39 cents. Theoretically, we make a little bit more money. 138 bucks to go towards next month. We'll see. If you see a big line, big white line, or even in like a couple zeros over here, you'll understand why next month. It's because I got rid of it. Unless they decide to repay the dividend. It's one of the risks you take, right? When you're doing these things, businesses, if they don't have the money for it, they're not going to pay their dividend. I was not paying enough attention. I should have been paying attention back in January to some of the information. I will actually bring up the information for the company. Basically, I should have looked at where is it? Yeah, their future growth. So the future growth over the next 3 years is looking really bad for the company here, for Robex Resources. You know, their free cash flow is just all over the place. So it kind of makes sense. They haven't reported it. Like, I don't have enough. There's not enough information that I have on my end in regards to overall debt versus dividend payout now that they're no longer paying one, but I believe it was pretty high before. I mean, they were paying 38% dividend, which I'm pretty sure in comparison to the price of the stock wasn't too good. When I looked at their financial health, they had $8 million in debt, and they had $80 million in equity. So at the time it looked okay. Obviously something has changed, and from what I've been told, the main thing apparently something to do with their cash and equivalents. You know, basically their liquidatable assets or something like that. I can't remember, but basically their debt to credit is still pretty low. It's predicted, like the last time it was reported back in September, it was 9.9% debt to equity, meaning, you know, for every $100 they technically owed $9. So that wasn't too bad, but apparently something's happened over the last little while Even people in the company are selling. So that's not a good sign. So we're going to try to probably offload this sometime in the earlier half of February, just to get it off the books. Put that, if I sell that, that'll bring in almost $2,000. Put that $2,000 into some other things, and we'll see how that goes. Because right now the overall value of the stock is 1936.62. So we sell, we make 138.33. So it's not bad. It's not bad. Man, what are you gonna do, right? In addition, as I said, there's more funds available as well. No mortgage, always a bonus. So what I've done is one mortgage payment per year or per month is gonna go into investment. So $500 a month is going to be going towards stocks now. So theoretically, we'll have the 500 plus whatever from the month before, and our dividends. Dividends went up this month to 270.53, which is pretty good. We did have a little bit of a lower end last month. We went down to 255, unfortunately. It's not often dividends go down, but that is because I believe I removed some. Did I remove something? Or was some extra payment somewhere? I can't. Oh, we had that extra payment a couple months ago that kind of threw the numbers out of whack a little bit. Yeah, 270 this month. The month of January, not bad. We're probably gonna hit. If we're going up on average about $10 a month, we're probably looking at around 300 within the next 3 months, which is pretty good. Which means it's that means we'll be reinvesting or investing $8,000 or $800 a month, and things are just going to start growing, which is good. One of the good things I like about this is the snowball effect, right? Once you start just piling in and piling in and piling in, it starts to grow. And no, we're getting there. Thanks for watching. I'll see you next time. I forget where my recording is. Anyways, thanks for watching. I'll see you next month or next Monday, where I go over what's been going on and all those things. And as you can hear from my son, he says hello. Bye-bye.